Hello, Mike Swanson of Wall Street Window here. This is my stock market update for the month of March, and we're actually in an interesting situation at the moment because the Nasdaq made a new high last week. However, the Dow is lagging that performance, so is the S&P 500, and actually most stocks are now lagging the Nasdaq 100 in general because the move of the Nasdaq 100 has been propelled with several big cap tech stocks such as Netflix, Amazon, Cisco, and Apple exploding higher, while there's several stocks in Nasdaq 100 that are lagging, that frankly look a little bit troubled. So bottom line, this is a market in which leadership is narrowing, and it's really time to evaluate what stocks you may own for signs of weakness, because you want to be in the winners and not the laggards. When there will be another stock market pullback, the laggards will fall more. And I want to show you some warning signs in these stocks. So the first one is Dollar Tree. Dollar Tree dumped last week more than 10% on a terrible earnings report, and it's in the Nasdaq 100. However, there are warning signs that this stock was in trouble. And look at the two indicators on the bottom of this chart. The first one is the relative strength indicator. That is a ratio of the price of Dollar Tree divided by QQQ, the Nasdaq 100. That indicator was in decline going into the dump. It was a warning sign. What that indicator tells us is how this stock is performing relative to the Nasdaq, and it was slowly trending down. The other indicator on the bottom is on balance volume. It also was trending down into that earnings disaster. And what on-balance volume is a running total of the days in which volume, in which the stock is up, and the days in which the stock is down, and it totals the volume on those days. So when there's an update, it adds volume. When there's a down day, it subtracts volume. It's to give you an idea if there's accumulation or distribution in shares. In a declining on-balance volume indicator, when a stock is going sideways, is a big warning sign. So here's one stock in which that is actually happening at this moment, and this stock has not collapsed, but it's a warning that it could very well be poised for trouble to come, and that's Discovery Incorporated. It's the creator of the very popular television channels that are very important for American culture. Animal Planet, the Discovery Channel itself, the Food Channel, the Travel Channel, mainstays of American life. But despite that, the stock is showing warning signs. Relative strength, of course, in sharp decline since the beginning of 2017. But on-balance volume has just recently taken a rapid tumble. If I own this stock personally, and I don't, I would likely get out of it and look to put that money to work in something else. And this is the type of analysis you may want to do with all your stocks. Here's another stock displaying some big warning signs. Shire Limited. This is a biotechnology drug company. As you can see, both these indicators have been trending down really since 2017. And the stock is below all its moving averages. Not a stock worth holding. Badly lagging the Nasdaq 100. And as you can see, when the Dow fell and the Nasdaq had a pullback in January, this stock got smashed. So any future market pullback, and I think there will be one at some point in the coming months, I would expect this stock to once again get smashed. Another stock that is displaying some warning signs is Hasbro, the toy company. It had a big gap down Friday when the Nasdaq made a new high. Relative strength has been in decline since last summer, which is a troubling sign. On-balance volume, though, has not yet broken down. So we have warnings on this. It's a situation to monitor and keep your eyes on. And another stock, the final fifth stock, is one that's probably going to shock you when I put it on here because it has been a momentum leader for years, but now some stark warning signs are just starting to appear, even though the stock has not collapsed yet, not dropped yet. But this is Facebook. Since November, Facebook has been lagging the performance of the Nasdaq 100. It was prior to that. Obviously, a giant market leader had a massive rally in 2017, even made a new high in January. But overall, since really August, it's been lagging the performance of the Nasdaq, lagging the performance of the QQQ Nasdaq 100, and on-balance volume is not started to trend down yet. But I think this is a big warning sign that this stock is set up to, it could be a future troubled stock. Not just on the one indicator, but both indicators, and then falling price. And one thing that bothers me is if you could just read news stories out there that people are spending less time on the Facebook website itself because changes is made to the news feed, that could lead to a bad earnings report and when the next one comes out in a couple months. So I'm watching this stock, and don't like what's starting to happen with it. So stay tuned for my next video update. Subscribe to my YouTube channel if you haven't already for that. If you're on the email list, and you certainly should be, check and keep opening my emails for more future stock market updates. Things are starting to get interesting. Some divergences are starting to appear inside the stock market itself.